Question 1. Which of the following is a primary consideration when an underwriter is evaluating an insurance application? A. The applicant's overall credit score. B. The type and amount of insurance coverage requested. C. The applicant's age and marital status. D. The applicant's geographic location. Answer: B. The type and amount of insurance coverage requested. Explanation: when evaluating an insurance application, underwriters focus primarily on the type and amount of coverage requested by the applicant. This allows the underwriter to assess whether the insurance policy aligns with the applicant's needs while ensuring that the company can assume the risks associated with the coverage. While credit score is important in certain types of insurance, like auto insurance, it is not the primary consideration for every application. C. Age and marital status may influence certain rates, but they are not the primary factors in underwriting decisions. D. Geographic location is relevant to some policies, but it is not the central factor in underwriting the overall risk of the applicant. Question 2. Scenario-based. Mr. Turner, a 45-year-old businessman, applies for a life insurance policy. He has a history of hypertension and is currently taking medication. The insurance company's underwriter is reviewing his application based on best practices in underwriting. Which of the following actions should the underwriter most likely take? A. Approve the policy as is, since hypertension is a manageable condition. B. Request additional medical records to assess the severity of Mr. Turner's hypertension. C. Reject the application due to the pre-existing condition of hypertension. D. Offer policy with significantly higher premiums due to the hypertension condition. Answer: B. Request additional medical records to assess the severity of Mr. Turner's hypertension. Explanation: underwriting decisions involving applicants with pre-existing conditions such as hypertension must be made with a comprehensive understanding of the severity and control of the condition. The underwriter should request additional medical records to better assess the applicant's overall health and determine if the risk is manageable under the policy. It is important for the underwriter to not make a decision without understanding the applicant's current health condition in detail. Simply assuming hypertension is manageable without evidence can lead to underwriting risks. C. Rejecting the application outright due to hypertension would violate fairness in underwriting. The condition must be assessed, not automatically rejected. D. While higher premiums are an option, the underwriter must first assess the severity condition before deciding on premium adjustments. This cannot be done solely based on a diagnosis. Question 3. Which of the following is a key factor in the risk selection process when underwriting a homeowner's insurance policy? A. The applicant's history of home maintenance. B. The applicant's credit score. C. The age and condition of the home. D. The applicant's income level. Answer: C. The age and condition of the home. Explanation: when underwriting a homeowner's insurance policy, the age and condition of the home are key factors in assessing risk. Older homes or homes in poor condition are more likely to require costly repairs and may have a higher risk of damage, which affects the underwriting decision. While home maintenance can influence risk, it is not a primary factor in the initial risk selection process. B. Credit score can be relevant in certain cases, but it is not a primary factor in homeowners insurance underwriting. D. The applicant's income level is typically not a factor in the underwriting decision for homeowners insurance unless it is related to their ability to afford premiums. Question 4. Which of the following best describes the purpose of an insurance underwriting guideline? A. To establish the minimum premium amounts for policies. B. To provide standardized rules for underwriting decisions to ensure consistency and fairness. C. To determine the exact coverage limits for each type of insurance policy. D. To assist in the marketing and sales of insurance products to customers. Answer: B. To provide standardized rules for underwriting decisions to ensure consistency and fairness. Explanation: underwriting guidelines are designed to ensure that underwriting decisions are made based on consistent, objective criteria. These guidelines help maintain fairness, reduce bias, and ensure that risks are accurately assessed across different applications. The guidelines outline the criteria underwriters should use when evaluating applications. While underwriting guidelines may indirectly influence premium decisions, they primarily focus on ensuring proper risk assessment rather than establishing minimum premium amounts. C. Coverage limits are defined by the insurer's policies and products, not by underwriting guidelines. D. Underwriting guidelines are not focused on marketing, but on managing risk and ensuring proper policy issuance. Question 5. Scenario-based. MS. Garcia, a 30-year-old single mother, applies for an auto insurance policy. She has had 2 previous accidents in the last 3 years. The underwriter reviewing her application finds the accidents to be relatively minor with no serious injuries. Based on underwriting principles, what is the most appropriate course of action? A. Approve the application without further review as the accidents were minor. B. Deny the application due to the history of accidents. C. Approve the application with a surcharge for the accidents. D. Require MS. Garcia to take a defensive driving course before approval. Answer C. Approve the application with a surcharge for the accidents. Explanation. Underwriting for auto insurance takes into account the applicant's driving history, including any accidents. In this case, although the accidents were minor, the underwriter should still assess the risk and may impose a surcharge on the premium to account for the higher risk associated with the applicant's history. A. Simply approving the application without further review would not adequately address the underwriting risk associated with the past accidents. B. Denying the application outright is not justified given the accidents were minor and did not result in serious injuries. D. Requiring defensive driving course may be an option, but it is not the standard procedure for dealing with past accidents in underwriting. Question 6. What is the primary responsibility of an underwriter when evaluating an applicant for life insurance? A. To calculate the exact cost of the life insurance policy. B. To assess the applicant's risk and determine appropriate coverage. C. To determine whether the applicant qualifies for term or whole life policy. D. To analyze the applicant's credit score and financial status. Answer. B. To assess the applicant's risk and determine appropriate coverage. Explanation. The core function of an underwriter in life insurance is to assess the applicant's health and lifestyle risks to determine whether the applicant is eligible for coverage and at what price. This process involves evaluating various risk factors such as age, medical history, and occupation. A. The cost of the policy is influenced by the underwriting decision but is not the primary responsibility of the underwriter. C. The type of life insurance policy, G. Term versus whole life, is generally selected based on the applicant's needs, not by the underwriter. D. While financial status may influence the decision in certain policies, it is not the primary focus in life insurance underwriting. Question 7. When an underwriter evaluates an application for homeowners insurance, which of the following factors is most likely to affect the risk assessment? A. The applicant's educational background. B. The proximity of the home to fire hydrant or fire department. C. The applicant's credit score. D. The applicant's family size and lifestyle. Answer. B. The proximity of the home to a fire hydrant or fire department. Explanation. The proximity of the home to a fire hydrant or fire department significantly affects the risk assessment for homeowners insurance. Homes that are closer to these resources typically pose low risk for fire-related damages due to quicker response times in emergencies. A. An applicant's educational background does not generally affect the risk assessment for homeowners insurance. C. While credit scores may influence premium rates, they are not as directly relevant in the risk assessment for homeowners insurance as physical property factors like location. D. Family size and lifestyle are not typically primary factors in homeowners insurance risk evaluation. Question 8. Which of the following would most likely be considered a red flag by an underwriter during the application process for a health insurance policy? A. The applicant has a family history of diabetes. B. The applicant is a non-smoker. C. The applicant has recently been diagnosed with a chronic illness and is undergoing treatment. D. The applicant has had a single annual checkup in the past year. Answer. C. The applicant has recently been diagnosed with a chronic illness and is undergoing treatment. Explanation. A red flag in health insurance underwriting is typically the presence of recent diagnoses of chronic illnesses that may significantly affect the applicant's health risk. The underwriter would need to assess how the condition could impact the applicant's long-term health and the insurer's risk exposure. A family history of diabetes may influence premiums, but is not an immediate red flag in underwriting unless the applicant shows symptoms. B. Being non-smoker is generally a favorable factor in health insurance underwriting, reducing risk. D. The frequency of checkups is less of concern compared to the applicant's current health conditions. Question 9. What is the most important factor when underwriters assess the risk for a commercial property insurance policy? A. The location of the business. B. The owner's financial status. C. The number of employees working at the business. D. The business's history of claims. Answer A. The location of the business. Explanation: the location of the business is a key factor in underwriting commercial property insurance. Risks such as natural disasters, theft, and other environmental factors are highly influenced by the geographical location of the property. B. While the financial status of the business owner can influence the decision, the location is a more direct factor in assessing risk. C. The number of employees can impact compensation insurance, but is not the primary consideration for commercial property insurance. D. Although business's history of claims is important, location plays more significant role in evaluating the overall risk. Question 10. Which of the following best describes the role of an underwriter in managing the underwriting risk? A. To determine the exact coverage limits for each applicant. B. To decide whether to accept or reject an application based on risk assessment. C. To negotiate with applicants about the terms of coverage. D. To provide customer service and advice regarding insurance policy options. Answer B. To decide whether to accept or reject an application based on risk assessment. Explanation: the underwriter's primary role is to evaluate the risks associated with an applicant and decide whether to accept or reject the application. This decision is based on thorough risk assessment that considers various factors such as health, history, and property conditions. Coverage limits are determined by the policy, not by the underwriter's role in managing risk. C. Underwriters do not typically negotiate terms. They assess risk and make decisions based on guidelines. D. Customer service and advice are typically roles of agents, not underwriters. These questions test advanced concepts in underwriting, focusing on risk assessment, decision-making, and the application of insurance guidelines in real-world situations. Question 11. Which of the following best describes the purpose of risk mitigation in insurance underwriting? A. To eliminate all potential risks from a policyholder's application. B. To reduce the impact or likelihood of risks that could lead to claims. C. To adjust premium rates based on the applicant's history of claims. D. To allow underwriters to make exceptions for high-risk applicants. Answer B. To reduce the impact or likelihood of risks that could lead to claims. Explanation: risk mitigation involves strategies to reduce the impact or likelihood of risks that might lead to claims. This could include requiring policyholders to adopt certain safety measures or risk-reducing activities. The goal is to minimize potential losses for the insurer. A. It is not possible to eliminate all risks, but mitigation helps reduce them. C. Adjusting premiums based on history is a different aspect of underwriting. A risk mitigation focuses on reducing the likelihood of future claims. D. Making exceptions for high-risk applicants does not align with the primary goal of risk mitigation. Question 12. Which of the following is most likely to be a factor considered during risk selection in the underwriting process? A. The applicant's gender. B. The applicant's credit score. C. The applicant's educational qualifications. D. The applicant's family medical history. Answer B. The applicant's credit score. Explanation: credit scores are increasingly used in underwriting as predictor of the applicant's financial responsibility. Insurers often believe that individuals with higher credit scores are less likely to file claims. A. Gender may be a factor in some types of insurance, but is generally considered discriminatory in many jurisdictions. C. Educational qualifications do not generally affect underwriting risk selection. D. Family medical history might influence underwriting decisions, particularly for life and health insurance, but it is not a primary factor for many types of coverage. Question 13. Scenario-based. Mr. Roberts applies for a business property insurance policy. His company has recently been involved in several lawsuits, one of which resulted in a significant settlement for damages. How should the underwriter handle this application? A. Deny the application due to the history of lawsuits. B. Approve the application with a higher premium to account for the potential risk. C. Approve the application with no changes as the lawsuit was resolved. D. Require additional background checks on Mr. Roberts' company and employees before approval. Answer B. Approve the application with a higher premium to account for the potential risk. Explanation: the underwriter should assess the risk posed by the company's history of lawsuits. While the application should not be outright denied, the underwriter may decide to approve the application but impose a higher premium to account for the increased potential for future claims. A. Denying the application outright would not be appropriate if the company has resolved the lawsuits. C. While the lawsuit was resolved, the company's history still presents a potential risk that requires consideration. D. Additional background checks may not be necessary, as the past lawsuits are already documented. Question 14. Which of the following best describes the concept of insurable interest in underwriting? A. The ability to make a profit from an insurance policy. B. The legal requirement that the policyholder must suffer a financial loss if the insured event occurs. C. The practice of setting high premiums for high-risk applicants. D. The process of selecting applicants based on their insurance needs. Answer: B. The legal requirement that the policyholder must suffer a financial loss if the insured event occurs. Explanation: insurable interest is a fundamental concept in insurance that ensures a policyholder can demonstrate financial loss if the insured event occurs. This requirement helps prevent moral hazard and fraudulent claims. A. While the policyholder can benefit from insurance, the primary purpose is not profit but to protect against financial loss. C. Setting high premiums is part of the risk assessment, not directly related to insurable interest. D. Insurable interest concerns the policyholder's financial relationship to the subject of the insurance, not their specific insurance needs. Question 15. What is the purpose of a policy exclusion in an insurance contract? A. To cover additional risks not typically included in the standard policy. B. To clarify which risks are not covered by the policy. C. To offer policyholders the option to extend their coverage. D. To allow the insurer to change policy premiums during the term. Answer: B. To clarify which risks are not covered by the policy. Explanation: policy exclusions specify the types of risks or circumstances that are not covered under the policy. These exclusions help manage the insurer's risk by clearly defining what is and isn't included in the coverage. A. Policy exclusions typically limit coverage, not expand it. C. Exclusions are not related to coverage extensions. They specify what is excluded from coverage. D. Exclusions do not affect premium changes. They are about coverage limitations. Question 16. Which of the following would be considered an adverse selection risk in insurance? A. An individual with no prior insurance history applying for coverage. B. An individual with a history of frequent claims applying for a new policy. C. An applicant who has received multiple insurance quotes from different companies. D. An applicant who is seeking the maximum coverage possible for a low premium. Answer: B. An individual with a history of frequent claims applying for a new policy. Explanation: adverse selection occurs when individuals who are at higher risk of needing insurance apply for coverage, potentially leading to higher than expected claims. An individual with a history of frequent claims represents an adverse selection risk for the insurer. An individual with no prior insurance history does not represent adverse selection unless there are other risk factors. C. Seeking multiple quotes is typical and does not indicate adverse selection. D. Seeking maximum coverage for a low premium could be part of a strategy but does not directly relate to adverse selection. Question 17. What is the primary function of the underwriting process in the insurance industry? A. To determine the premium rates for different policyholders. B. To assess and evaluate risks and decide whether to accept or reject an application. C. To manage the insurance claims process. D. To market and advertise the insurance company's products. Answer: B. To assess and evaluate risks and decide whether to accept or reject an application. Explanation: the underwriting process primarily involves assessing and evaluating the risks associated with an applicant and deciding whether to accept or reject the application based on that evaluation. A. Premium rates are determined after underwriting, not as part of the core underwriting process. C. Managing claims is a different function within the insurance company. D. Marketing is outside the scope of underwriting, which focuses on evaluating risk. Question 18. In underwriting health insurance policies, which of the following factors would most likely influence the decision to approve or deny an application? A. The applicant's age. B. The applicant's credit score. C. The applicant's occupation. D. The applicant's preferred insurance company. Answer: A. The applicant's age. Explanation: age is a significant factor in health insurance underwriting. Older individuals may be at higher risk for health problems, which affects the insurer's decision-making process regarding coverage and premium rates. B. While credit scores may influence premium rates, they are less directly related to health insurance approval. C. Occupation may influence risk but is less significant than age in health insurance underwriting. D. The applicant's preferred insurer is irrelevant to underwriting decisions. Question 19. Which of the following is the most appropriate strategy for mitigating underwriting risk in commercial property insurance? A. Offering larger coverage limits to attract more customers. B. Requiring property owners to implement fire prevention and security measures. C. Allowing policyholders to self-insure to low premiums. D. Lowering premiums for high-risk properties to make coverage more accessible. Answer: B. Requiring property owners to implement fire prevention and security measures. Explanation: requiring property owners to adopt risk-reducing measures such as fire prevention or security systems is a key strategy for mitigating underwriting risk. These measures reduce the likelihood and impact of potential claims. A. Offering larger coverage limits without considering risk increases exposure to underwriting risk. C. Self-insurance is not typically an option for commercial property insurance. D. Lowering premiums for high-risk properties is not a sound risk mitigation strategy and could increase potential losses. Question 20. Which of the following is a primary ethical consideration for underwriters when assessing insurance applications? A. Ensuring that the applicant has the lowest premium possible. B. Treating all applicants equally and fairly without bias or discrimination. C. Adjusting coverage limits based on personal relationships with applicants. D. Offering the maximum coverage available to applicants to increase sales. Answer: B. Treating all applicants equally and fairly without bias or discrimination. Explanation: underwriters must adhere to ethical guidelines which require them to evaluate all applicants fairly and equally. Discriminatory practices or bias based on factors like race, gender, or personal relationships violate ethical standards in underwriting. A. Premiums are based on risk assessments, not on ensuring the lowest possible premium. C. Adjusting coverage based on personal relationships is unethical and conflicts with the principle of fairness. D. Offering maximum coverage for sales reasons can lead to inappropriate coverage decisions that may not be in the best interest of the applicant. Question 21. What is the primary risk associated with offering coverage for high-value properties in homeowners insurance underwriting? A. Increased competition with other insurance companies. B. The possibility of catastrophic financial losses in the event of claim. C. The administrative cost of issuing multiple policies. D. The difficulty of accurately assessing property values. Answer: B. The possibility of catastrophic financial losses in the event of a claim. Explanation: the primary risk associated with offering coverage for high-value properties is the potential for catastrophic financial loss. These properties may result in large claims that can be costly for the insurer. A. Competition with other insurers is a market risk, not an underwriting risk. C. While administrative costs are factors, they are not the primary risk in underwriting high-value properties. D. Assessing property values accurately is important, but not the primary risk compared to potential catastrophic loss. Question 22. Which of the following underwriting processes is most commonly used for evaluating life insurance applicants? A. Accepting all applicants with no medical evaluation. B. Reviewing the applicant's medical history and lifestyle factors. C. Adjusting premiums based on geographic location. D. Using standardized formula to determine the coverage amount. Answer: B. Reviewing the applicant's medical history and lifestyle factors. Explanation: life insurance underwriting focuses heavily on reviewing the applicant's medical history, age, lifestyle, and health conditions to assess their risk and determine appropriate coverage and premiums. A. Accepting all applicants without evaluation is not responsible underwriting practice. C. Geographic location may affect pricing but is less relevant in life insurance underwriting. D. Coverage amounts are usually selected based on the applicant's needs, not standardized formula. Question 23. Which of the following statements best reflects the role of insurance regulations in underwriting decisions? A. Regulations allow insurers to offer low premiums without considering underwriting risk. B. Regulations ensure that underwriting decisions are consistent, fair, and based on legal guidelines. C. Regulations require underwriters to automatically approve all applications that meet basic criteria. D. Regulations mandate that underwriters use only credit scores for risk assessment. Answer: B. Regulations ensure that underwriting decisions are consistent, fair, and based on legal guidelines. Explanation: insurance regulations are in place to ensure that underwriting decisions are fair, legal, and based on objective criteria. They prevent discrimination and ensure that insurers follow established legal standards in their assessments. A. Regulations do not permit underwriters to ignore risks or offer low premiums without proper risk assessment. C. Regulations do not require automatic approval of applications. They ensure fair decision-making. D. Credit scores are one factor in underwriting but are not the sole determinant, and regulations require a more holistic approach. Question 24. Which of the following is a primary benefit of using automated underwriting systems in the insurance industry? A. They eliminate the need for human underwriters. B. They ensure that all applications are approved without manual review. C. They increase the speed and efficiency of processing applications. D. They guarantee that all applicants will receive the same premium rate. Answer: C. They increase the speed and efficiency of processing applications. Explanation: automated underwriting systems are designed to streamline the underwriting process by quickly analyzing risk factors and providing efficient processing of applications. This reduces the time required for manual reviews, improving overall operational efficiency. Automated underwriting systems assist human underwriters, but they do not eliminate the need for human involvement in all cases. B. Automated systems help speed up the process, but do not guarantee approval for all applications. D. Premium rates depend on the applicant's risk profile, and automated systems do not set rates universally for all applicants. Question 25. When an underwriter uses an applicant's driving record to determine eligibility for car insurance, what type of risk is being assessed? A. Personal risk. B. Moral risk. C. Physical risk. D. Legal risk. Answer: A. Personal risk. Explanation: the driving record assesses personal risk because it evaluates the individual's behavior and history related to driving, which helps determine the likelihood of future accidents or claims. B. Moral risk concerns the potential for an applicant to engage in dishonest or fraudulent behavior, which is not the primary focus in evaluating a driving record. C. Physical risk pertains to the condition of the applicant or their property, not their behavior or history. D. Legal risk involves compliance with laws and regulations, but the driving record primarily indicates personal behavior risk. Question 26. Which of the following would most likely result in an insurance company adjusting a policyholder's premium after policy has been issued? A. The policyholder moves to new residence in different state. B. The policyholder files claim for small amount. C. The policyholder gains more experience in the insured profession. D. The policyholder decides to add another insured vehicle. Answer: A. The policyholder moves to a new residence in a different state. Explanation: moving to a different state can affect the premium, as insurance rates can vary significantly by location due to factors like local laws, crime rates, and risk exposure. This change could lead to an adjustment in the premium. B. A small claim may or may not lead to an adjustment in premium depending on the insurer's policies and the size of the claim. C. Experience in a profession might reduce the premium, but this is more likely during the underwriting process rather than after the policy is issued. D. Adding another vehicle would typically lead to a premium increase, not a decrease. Question 27. What is the role of a reinsurance company in the underwriting process? A. To directly evaluate applicants for primary insurance policies. B. To provide coverage for policies that exceed the primary insurer's risk limits. C. To handle claims and payouts for the primary insurer. D. To offer low premiums to high-risk applicants. Correct answer: B. To provide coverage for policies that exceed the primary insurer's risk limits. Explanation: reinsurance involves transferring some of the risks from the primary insurer to reinsurance company, helping the insurer manage large or catastrophic losses. This protects the insurer from the financial impact of large claims. A. Reinsurers do not directly evaluate applicants. Their role is to assist with large or excessive risks. C. Reinsurers do not typically handle claims. This is the responsibility of the primary insurer. D. Reinsurers do not offer premiums to individual applicants. They deal with risk sharing between insurance companies. Question 20. Which of the following is an example of a moral hazard in underwriting? A. A person applying for life insurance after they have been diagnosed with a terminal illness. B. A person deliberately causing damage to property to collect an insurance payout. C. A person applying for auto insurance with a clean driving record. D. A person applying for home insurance with a history of flood damage. Answer: B. A person deliberately causing damage to property to collect an insurance payout. Explanation: a moral hazard occurs when an insured individual engages in risky or unethical behavior because they know they are covered by insurance. Deliberately causing damage to property is an example of moral hazard where the individual seeks to benefit from a claim. A. Applying for life insurance after a diagnosis is an example of adverse selection, not moral hazard. C. A clean driving record indicates a low-risk applicant and does not reflect moral hazard. D. A history of flood damage could indicate higher risk but is not an example of moral hazard. Question 29. In the context of health insurance underwriting, what does pre-existing condition refer to? A. A condition that an individual develops after obtaining health insurance coverage. B. A condition that existed before the individual applied for health insurance coverage. C. A condition that is unrelated to the individual's health insurance status. D. A condition that is always excluded from health insurance coverage. Answer: B. A condition that existed before the individual applied for health insurance coverage. Explanation: a pre-existing condition is any medical condition that existed before the individual applied for or enrolled in a health insurance policy. Insurers may exclude coverage for pre-existing conditions or impose waiting periods for such conditions. A. Conditions developed after applying for insurance are not considered pre-existing conditions. C. Pre-existing conditions are directly related to health insurance status. D. Not all pre-existing conditions are excluded from coverage, though they may be subject to waiting periods or limitations depending on the insurer. Question 30. Why might an underwriter require an applicant to submit a medical examination report during the underwriting process for life insurance? A. To assess the applicant's overall health and identify any potential risks. B. To determine if the applicant qualifies for a higher premium rate. C. To ensure that the applicant has a life expectancy of at least 10 years. D. To reduce the underwriting workload and streamline the process. Answer: A. To assess the applicant's overall health and identify any potential risks. Explanation: a medical examination report helps the underwriter assess the applicant's health status and identify any risks that might affect the life insurance policies, such as pre-existing conditions or factors that could shorten the applicant's lifespan. B. Premium rates are determined based on the overall risk profile, not solely on the medical exam results. C. Expectancy is a consideration in underwriting. The focus is on overall health and risk factors. D. A medical exam adds time to the underwriting process but provides valuable health data to assess the risk.